Hey guys, I hope you're having an amazing day. It's Nicholas here from Benefits Up. So just thought to make a quick review on our trade updates for the week, and we have some running trades, especially on Ethereum. Currently, Ethereum is in a ranging position, and that's because the market is currently consolidating. So we saw Ethereum after we have this initial breakout. So here, I'm going to pick up the brush tool just to highlight this section. So yeah, we had this initial breakouts, and instead of price, as usual, it should continue. But we saw a regression in price, and price retraced back down and kept oscillating. And then we established the range for this formation where we could pick our first eyes, and also could pick this other one here, this one here, which is the breakout level. And lastly, we have this one here. So the same thing with the base, we have multiple base formation there. I'm going to take this out for this one. So what I'm just observing is that the good thing is that the range in chat, the peak of the range in chat, the upper channel, upper resistance aligns with the breakout level. That tells us that the minutes most likely when price eventually gets up to our breakout entry level again, we could see a possible push above that, or we could see a slight rejection, and then further push through. But one thing is clear: we are going upwards because the support level of the long-term channel. This is the long-term channel on Ethereum. Has been bullish for a very long time. This long-term channel has been fully respected. The support level is respected and also aligns with the base of the ranging chart. So there's a high possibility that we're going to see price dip slightly below, but that will not be a breakout. That will just be a fake out because it's still within the ranging chart formation. So this is like multiple chart alignment, and it's very, very key, and it's also very, very solid signal. And I'm looking forward to this trade. It's going to be a very great trade for every one of us. So since the baseline of the ascending channel is being respected, that's even solidifies our stand. And soon as we break above the moving average, because price has been below the moving average for quite a while now. So as soon as we break above the moving average and also break above the random chats, consolidation chats, breakout level, that would be around here. That would be around 44, 90, 45, 100, and also breaks out above our previous entries. That confirms, that's like a trial confirmation for our trade setup. Also, we can see the divergence of the formation here. It's been bullish, bullish, bullish. So there's a strong momentum for a bullish rally coming up soon on Ethereum. So guys, fingers crossed. But that's the trade setup. And if you missed it in our channel, this could be, yeah. So yeah, we have that here. I'm gonna just put that here. This is our last entry, but then an entry below that is also very much valid. Okay, next we're gonna be taking a look at is BTC USD. Now BTC USD is also in a very funny situation, just as Ethereum is. So we have this. I'm gonna go straight down to our 4 hour time frame, and we'll be seeing multiple bullish corrections. And now we are currently here, and there's a strong possibility. I'm going to take this out. So there's a strong possibility for us to see another breakout again, similar to what we have in Ethereum above this range chart, which is the consolidation. So I'm just going to highlight that here just to make it easy for everyone to know the spot. So consolidation ranging charts. Now, Bitcoin does this a couple of times and it's not strange. So, no, 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 I don't want that there. I'm going to put that at the bottom right and then black. So, yeah, so we have this range chart on Bitcoin. And similar to Ethereum, I'm looking towards a breakout above this level. Our initial breakout entry was somewhere around here, which we already closed that trade. So, I'm going to be giving them more updates soon. And then we're expecting this breakout above here. If we get the breakout above this level, then it's a key indication of a continuation of our bullish trend. And also, that's literally still going to coincide with our simple moving average and the 200-day moving average. When this break out above here, it's all likely break out above the average. So that will give us a new base support for the bullish trade and the bullish rally. So yeah, for this setup, I'm looking at the long position on both Ethereum and Bitcoin. So this will be our target profit, and our stop loss will be somewhere around below this support, because of Bitcoin, we have this formation here, and this is our baseline support, but we can also pick up our channel because this is the channel formation already being established here. and they can have something like that here too. So when we have a breakout above this level, this will likely move to the upper band of the channel, and we could get something similar to this. We can get something like move like this, and then they drop back down, and eventually, it will keep creeping with this because there's also there's also this resistance level here, which we'll have to break, to so either we keep creeping with this channel as our new established channel formation because already we've, this is out, this is the current situation that we have right now. So this would play out most likely, and we could see price linger around there, and then eventually, head for our targets of profit. So that's all about it for Bitcoin, and we're gonna go down to oil. So for oil, we've seen price form a new setup. We see price form into a pennant formation, or I'll call it an a symmetrical triangle, but it's more like a pennant here because we haven't gotten enough data to establish if this is going to be a long term or short term, but it looks like a very short term. So this was our initial breakout, and we had this trade as well. So we see price now consolidating within this level. So most likely, I'm expecting us to break out below. Okay, as I said in our last week analysis on Sunday, sell the rally. So this was a good time to short, but these are short positions in very short term, so not necessarily to catch them. But long term, we are expecting either a breakout below 62.70, or if most likely, I'm thinking we could get. We're gonna act. Where can I find that? Yeah, we could get something like this. We could see price from, a short term fake outs just to create, to like a smart money concept to like take the liquidity of the market before the drop. So there's a high possibility for us to see price hit this level again. This level, I think I already have that before. Just gonna highlight it. Key SR level. Yeah, I'm gonna put that as SMC. So this could be a factor we could be considering. Now, when price gets to this level, we'll make that bold just to show the significance of that level. When price gets to this level, we could see, further decline from this point. And so what I'm thinking that is going to play out is a fake out above our entry price or the sell position price, and then a decline. Then we'll see price start going maybe probably here, linger a little bit, and then we are heading for lower prices. So that's what I'm expecting for oil. And the last on our analysis would be gold. Now, for gold has been strongly disrespecting all our technical analysis in the sense of divergence formation, right? Now, on the larger time frame, I'm not going to say this is not true. On larger time frame, we have gold fully respecting the ascent triangle formation, and like I earlier said, when we have this ascent triangle formation, we pick the height of the channel, and that's our target profit. So the long term target profit for gold is 39.25, but before then, there's high possibility for us to see multiple rejections, multiple correction. I don't expect price to just keep going straight up. So while this is a long-term focus on the lower time frame, we can see gold in this channel, ascending channel formation. It's been in the bullish trend. So I would always say it's better for you to wait for the dips and you buy on the dips because you have more guarantee of price going up than going down. But regardless, we've had multiple bearish consolidations and multiple bearish divergence, and price is still yet to respect any of those things, right? So we can see some of the significant spots. This was the first one, which was the only one that was initially respected, and that was even linger because we had this year until we had this year before price finally respected that divergence, which is in line with SMC, but it's it's not too early. It only tells you that because the market is acting based on fundamentals. The NFP reports pushed price so high, and we've seen the effect of the traders' anticipation for the rate cuts is also keeping sustaining price, and that's why we're not seeing gold like really drop down because gold has been in a long, it's been a long uptrend from the breakout. This was I'm going to pick up this price too. This was about uh, oh my god, this is about 3,200 pips price movements, and that is no small. That 32,000 price movement. That's no easy feat for no, not 32,000, 3,200 pips. Excuse me, God. So that's no easy feat for gold, and it's really really difficult for us to see price, approach this level and come back down. So what we can do now is to just let the market play out. Let's respect the market for what it's going to give to us, and not because of what we want to get from the market, right? So this was the initial uh, divergence formation. Then we also have this one, which is also a very strong one. So this second rather. Now I'm going to pick up the points for you guys to see clearly. So we had this here, we had this here, higher highs, and then we had the lower highs on the divergence. That was the first one. And I'll make this 2x and I'll make this red for easy identification. So the next one we had was here, where we had price move from this point, to this point. Now, this was our second level of divergence, and it was not respected because why? There was sustaining bullish momentum. And after this level, and that was also here, although the chart did not, the indicator did not recognize that, but that was a divergence there. And then we had the third layer from here to the current points we have right now. And we can see again, once again, we have higher highs and multiple higher highs, of course, and we have lower lows. Yeah, we have higher highs, so this doesn't really count much. So instead of using this one, I'm going to pick up the larger time where we have this here, from here to here. So we have, take this one out, we have this to this point, but then on the lower time frame we have this to this point. So these are multiple divergence formation here, here that have been formed, that are yet to be respected. And all of this indicates just the same thing I was saying. The bullish momentum is winning out, but it's been sustained by the fundamentals. And because the fundamental values are very solid, it makes it kind of like make the technicals a bit, what am I going to use? Obsolete. So for now, guys, while we still see the data, and even right now, I mean, look, we currently have the divergence formation already on the hourly time frame from this point to this point, and even the possible breakout below this level. That's for intraday trading. Yet market is not really acting on it. We should have seen some strong momentum. I'm expecting actually for us to see price drop. Yeah, possible for us to see price drop down to 3602. But till then, fingers crossed, and let's see what happens. All right, guys, cheers, and that's all for today's analysis. See you around later.